Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to the show. This is episode 205, Solving Unique Retirement Challenges for the Corporate Employee. Cory, thank you for joining me back on the show.
Jake, thank you for having me.
It's a long title today, but I can assure you, Cory, it's going to be an impactful show. So I'm really excited to talk about this subject because it's something that you and I deal with on a daily basis. But before we dive in today's show, do you have any personal updates? You got any shows, movies, anything going on in your life that's been fun and exciting that you want to share with the millions of viewers out there?
Millions of viewers out there. I don't know if I have anything exciting enough for that many people. But no, I think it's one of those questions, Jake, that for some reason I'm just never prepared to answer, but I should be. I'm reading a book right now that you've read called Predictably Irrational.
Mm-hmm.
And that's very good, very interesting, compelling, and thought-provoking. So I have enjoyed that. And, outside of that, I don't think there's too much else.
Yeah, well, thank you, Cory. I know I can always throw you in the deep end of the water. That's kind of been our style over the last decade of working together.
Hey, you know what? It's worked.
It has worked. It has worked. I'm reading a good book too. I'm almost done with it. It's called Leadership is Language. And I read this last night. I thought it would be interesting. But Cory, the best way to avoid making a mistake is?
Critical thought.
No, not bad though. It's actually doing nothing.
Yeah, that's true.
Right. So the best way to avoid making a mistake is to not do anything at all. And the point of that is that you as a leader and running an organization, which is now what Falcon Wealth Advisors is becoming a full blown out business. I'm trying to encourage our team to stretch outside their comfort zones and work, right? Get things done and then pause to reflect and think about how they could have done things differently. But we want to welcome an environment of mistakes because that's the only way that you grow, in my opinion, and get better and improve. And so it talked about a lot of people are afraid to make mistakes. And so the best way to not do it is they just freeze and they don't do anything. So I thought that was pretty interesting, but we want to create an environment where our team is ready to make mistakes so that they can learn from them.
That is good.
But yeah, so but that's not the topic of today's show. But before, again, I dive into the topic, which is solving unique retirement challenges for the corporate employee, I want to thank you for tuning in, listening, or reading Upticks. Our subscriber count continues to grow. I think, Cory, I've had over 40,000 people download my podcast, which is really cool. So again, if you're not already subscribed, please do so. If you think it's worthy, give us a 5-star thumbs up rating and like and share our content. That's the best way that we can educate more people. And again, our mission or our purpose at Falcon Wealth Advisors is ultimately clients choose to work with us to enhance their financial literacy and explain exactly what their financial plan means to them. And that's the point of Upticks and really what we do at Falcon Wealth Advisors. Cory, you want a quick plug for your show before we get into the subject?
Absolutely. Yes. The podcast and video show that I host is called In the Money Insight. I am coming up on episode number 113, I believe it is, that I will be recording next week. It's available on the Falcon Wealth Advisors Collective, right where Upticks is. And you, of course, can subscribe to the podcast wherever it is that you listen to those. But I, too, just as you mentioned, Jake, love feedback, suggestions for show topics. But, of course, appreciate the 5-star ratings and the thumbs up, too, because it is something, Jake, that I've mentioned to you before, and I've told this to a few people, that really has gotten a lot of traction and has taken off since we started, creating this content and making these shows years and years ago. And it's been really exciting and fun, but ultimately the reason we're doing it is to try to help educate people. So we, of course, are always open to what topics people want to be educated on.
Perfect. Thank you, Cory. So again, for today's topic, so we have many of our clients, and I would say probably the majority of our clients have worked at a corporation, typically a large one with thousands and thousands and thousands of associates or employees, and they typically have a 20, 30, 40-year career. And there's some unique challenges that these individuals face when they're approaching retirement, Cory. And the number one topic I want to talk about today, and I want to talk about four, I want to talk about four topics today, but first, it's very interesting to me, for many of our clients, Cory, it's not a matter of when they can retire, but why. And what I mean by that is many of our clients have had enough money to retire for several years. So they'll have $2, $3, $4, $5+ million. So when we run the financial plan, Cory, and we meet with these individuals, we often tell them, we run a scenario if they retire tomorrow, and in many cases, for these people, they can. So now our conversations and our review meetings are not about when, but why are they going to retire? And maybe you can share some insight into some of the conversations that you have with clients when you're talking about why they should retire, not when. And again, real quick disclaimer, we never aim to talk somebody into retirement. That's not what we do here at Falcon Wealth Advisors, but we want to just open their mind to the possibilities of what the grass will look like on the other side, because it's a very scary transition for many people. And I want to talk about some of the conversations that you have, Cory, around why retiring.
Excellent. So one of the things that I've shared with clients before, Jake, is that retirement is not a number, which you and I both know, or it's not an age, right? That's just not the nature of it. There's not some arbitrary age. I think people gravitate toward, 59 and a half, 62, 65, whatever it might be, because there's a number of different benefits that can become available at those ages. But retirement is not just an age. And having not only a financial plan to ensure that you can stay comfortable in retirement, but making sure that you have a plan to stay active and engaged in retirement, and you have a plan for how you want to spend your time. And I found, Jake, I went and I found actually a study that had been done at Wharton at the University of Pennsylvania on retirement that talked about how the retirees that tend to be happiest are those that also tend to give the most back. Now, whether that is charitably or volunteerism or whatever it might be, or just, training and educating other people on the institutional knowledge that they have learned over their years, that people that give back and stay active and engaged in retirement tend to be the happiest. So having the financial plan, but also having a plan for how you're going to do that.
Oh, that's really good, Cory. And again, it's not necessarily giving, your money away.
Exactly.
It's time, knowledge. And, I've been coached on this actually. And they talk about when you're struggling internal and you're feeling maybe upset or frustrated. What my coach had taught me is to go external. And what that means is provide kindness or give to people around you. And it's interesting how that reflects back and actually cheers you up. And so that's very interesting, Cory, that you bring that up. And so again, that's finding your new why. And I don't even particularly like the word retire, because to many people, it sounds final, right? Like I'm leaving my company and this is it. But it should be more of like a new chapter or a transition or a new career, right? Or a million other things we could call it. But you're basically moving from, the tough part is something you've been doing 30 years and saving and working hard towards. Now you want to have financial freedom, and not just financial freedom, but you want to have ultimate time freedom. And I think that's what probably is most exciting about meeting with clients that are preparing to retire and are ready for it, because now they're getting back 40, 50, sometimes 60 hours a week of their time, that instead of, clocking in or giving that to a company, they're going to be able to give that to their family or to a charity or to a new business that they're going to create. But it's very important. Again, we know you're not going to be able to map out the next 30 years of your life, just like you didn't map out the last 30 years of your life. But what we want to encourage is finding that new why. What is your purpose? And you always say this, Cory, what are you going to do a Tuesday at 10 o'clock if you're not at work? Now, the biggest problem that I see though, Cory, is a lot of our clients love what they do in corporate America, right? They have stressful jobs. And what do you tell someone where maybe their spouse is staying at home and they don't work, but the person that is working, even though they have a stressful, frustrating job, maybe their ego is identified with it a little bit and their purpose is in being important at job. What do you tell someone like that when they're contemplating retiring? How do you coach somebody through that? Because that's a tough one, I think.
It is, yeah, that is a challenge. I think that, well, and real quick, Jake, just going back to what you said earlier, about the word retirement, right? How it sounds final. One way that I like to think about it, I've talked with clients, is thinking about it as work optional, right? It's not that you need to do nothing. It's just that you have the option to continue working or not, or you have the option to go and do something else. But back to what you were asking about, how do you guide someone in that situation? I think where I would start is by, trying to ask some questions. It may require someone to be a bit vulnerable with their answers, but to understand what is their long-term plan. Like, yes, if I work in a job that I love, and my ego maybe is identified, or it has very much become part of who I am, and the idea of losing that can be scary. And I think that's okay. It's better to think about those things before you make that choice to retire. But start by understanding what really is your long-term plan, because just because I have a job that I love and it's still stressful and difficult for me, I'm sure that someone doesn't want to do that forever. The point there being, whether someone is 50, 55, 60, or 65, regardless of what age they are, it's still worth contemplating. Eventually, I'm not going to be working, and I need to give some thought to what I'm going to do then. And I need to make sure that I will still feel complete as a person without that career.
Right. Very good. And I think that the first step, if you haven't thought about this and you're watching this show, is just bringing awareness to it. And like you said, Cory, it's not an easy subject to tackle, and a lot of people just want to ignore it and keep their head down and keep working. But you're right. I think looking out, what does the next 5, 10, 20 years look like? And maybe you do want to work forever. I mean, we have some clients that work very late in their years, but I'll tell you, that's far fewer than a lot of our clients that retire in their 50s. So, but again, that's okay. But again, bringing awareness, what is it that I really want to do? And have I satisfied my career goals? And do I feel comfortable where I'm at? Am I okay with it? And this is the harsh reality, which I hate, but this is the truth of it, is that a lot of these big corporations, they won't hesitate to tap you on the shoulder and tell you it's time to go if they need to cut the budget or something, right? So that's what's really difficult, that many of our clients give obviously decades of their lives, blood, sweat, and tears to a company just to be cold shouldered a little bit. So you have to remember that that nobody is bigger than the whole, right? And so even though you're probably an amazing, executive at this company, the company is going to go on, right? These big companies go on even when our clients retire. So you got to put that in perspective a little bit, right? So
yeah, that's real good. And the last point I just want to make there too, Jake, is to everything we're talking about, just thinking about what someone's identity is. While yes, you may be a senior vice president with a specific company, oftentimes we have clients that's part of who they are, but they're also a father, a husband, a wife, a grandmother, whatever it might be. So that may be part of their identity, but typically it's not the only part.
Good point. Good point. And it's a good time to check in on that and see who you truly are, and visit that. All right, good. So enough with the wishy-washy stuff. It's tough though. The emotional part is very important. And I think a lot of advisors ignore it, and it's something we don't. And I just shed light on it. And if a client wants to go down that road and discuss it with me, I'm happy to. If they don't, I can respect that as well, because I know it's not an easy subject to tackle. But just know at Falcon Wealth Advisors, we've done this literally hundreds of times with clients. So we're happy to walk you through that and help you, and basically take you through an exercise of asking some of these open-ended questions to help spur some of that thought. And in fact, if you feel like you need to take it to a whole nother level, I can even refer you to a retirement coach who specializes in helping the people deal with the emotional side of retirement. Okay, now let's talk about the financial piece, because that's also what we do, Cory, right? It is a big part of the financial piece. So I want to talk about here in my second topic about, again, solving some of these unique retirement challenges that many of our clients are granted stock options, restricted stock, performance shares, right? Bonuses that have vesting schedules. And what that means is, Cory, you may get $10, $20, $50,000 handed to you, but you have to keep working for 3 years, 4 years, 5 years in order to fully realize the full value of that bonus. It's also referred to a little bit as golden handcuffs. And the idea is that they keep, highly compensated or executive directors or vice presidents employed by locking them in, saying, okay, Cory, we're going to give you 50 grand, but in order to realize that, you got to work here 3 more years, right? But the problem is they keep getting them every year. And so it's really difficult of saying, how much money do I want to leave on the table? Because again, basically they're going to keep giving me these awards, Jake, and I'm never going to fully realize them. So Cory, what's your comment to that when somebody says, hey, I keep getting these bonuses, but if I retire, I'm going to lose money. So therefore I'm going to keep working, Cory, even though I'm miserable and I hate my job and I want to go on my boat at the Lake of the Ozarks, but I can't because I feel like I would be harming my financial plan if I walked away from all this money. What do you say to that question? These are tough ones, but
they are. One would be barring an extremely unique circumstance, you're always going to be leaving money on the table because of the nature of what you just described. So I think in some ways, going back to, I don't want to take this back, Jake, too much to the touchy-feely kind of kumbaya stuff we've talked about, but I think asking yourself and understanding how much is enough, how much do I need to maintain the lifestyle that I would like in retirement? So that's one part of it. How much is enough? But then also, in the scenario you just described, you need to know when you've had enough, right? If it's something that you don't enjoy doing and that it is stressful, and the only reason you're doing it is to continue to, earn more dollars and to earn more equity awards, et cetera. If your financial plan is not requiring that, it's important to understand that, because in that situation you described, theoretically, someone could, work forever because they're always going to leave money on the table when they leave.
Right. Even if you just get a salary and you don't even get any of these corporate awards, you're technically leaving money on the table, because if you retire in 2023, well, you're walking away from a salary, yep. I guess in exchange for your time. But you're good. That's a good point, Cory. You're almost always going to be walking away from some sort of financial compensation. And that's really good. What we do is we model all that out in your financial plan, and we can tell you, okay, if these awards don't vest, this is what your plan looks like. If you do stick around and they vest, this is what your plan looks like. And again, for many of our clients, sure, typically there's more dollars at the end of the plan if you stick around, but they've got to weigh, is my time more valuable than the money that I'm walking away from? And that's really what it should boil down to. One quick other tip I have for you, if you're watching or listening or reading this, is I would encourage you to go to your supervisor and ask, because a lot of times if you're highly compensated, they actually sometimes might want to replace you with someone that they can pay a lot less and give less bonuses and awards to. So you might ask, like, saying, hey, is there any way we could work out some sort of exit package where my outstanding awards will vest so that I don't lose money? I don't think it hurts to ask in that situation. And again, it might not be written in the rules of your corporate, bylaws or guidelines, but again, I don't think you're going to do any harm by asking. Certainly, but you want to, when you do that, you want to be prepared for them to say no. And, and if you're high enough up, they might start asking you, well, what are you doing? Are you retiring?
Right.
Like, you know what I mean? So just be a little bit tactful if you go do that. I wouldn't just ask off the cuff. I would make sure you have your cards, all lined up and that your financial plan is in good order. But I would encourage anybody that has awards that they're walking away from to at least ask, whether it's HR or your supervisor, about potentially working out some sort of package where they will allow them to vest. Because we have had clients, we've seen that happen, right? Where they have left and their restricted stock or stock options have vested. So it can happen.
That's great. And I think that's good advice that you gave there, Jake. But I think that's a good question to ask in that situation. But I think the questions, like we said, just to sort of reiterate the point, but the questions for someone to ask themselves in that situation is, one, do I have enough? That's where Jake and Falcon Wealth Advisors can help, right? If a trusted fiduciary wealth advisor can help understand, do you have enough? And then the other question to ask is, have I had enough? And that may be one that you need to answer. You answer with your spouse, with your family, whomever it might be. But I think that those are two important questions.
Did you originate that just now? That was really, did you originate, do I have enough and have I had enough? That's pretty good.
Nope, I didn't.
Oh, you copied it. All right, fair enough.
I read it somewhere.
I like it though. I like it. That's good.
Thank you.
That's really good. All right, good. So moving on to our third topic is I want to talk about, again, a unique challenge from leaving your corporation is not only around timing from a just pure financial planning perspective, but timing from a tax planning perspective. And so what I'm talking about is we can even get more granular here, Cory, about the time of year that you retire, and then also looking at company stock within your 401k. So maybe you could talk about, Cory, do you recommend a time of year for certain people to retire? And again, I know all companies are different, but as far as tax planning is concerned?
As far as tax planning is concerned, yes. If we are looking at retirement and assuming all else remains equal, if someone is retiring near or at the end of the year or even early on into a new calendar year, that gives some latitude and flexibility around what their taxable income looks like for the year that client retires and beyond. But I also think, quite literally in a place like the Midwest, like the season that you retire probably matters just for the sake of making that transition from employment to, not working anymore. Retiring in the dead of winter can be tough for people.
Yeah, and I think that the season used to be a bigger deal when people were going into the office, but now that so many people have done this work from home, that they're used to being home, even in the winter, right? So I think that is a little different, but you're absolutely right. If you're retiring in Kansas City in February and it's snowing and you can't do anything, and you're like, well, I'm just going to sit at home anyways, I might as well make a paycheck. That might be a reason to keep working for a couple more months. But from a tax planning perspective, I think you're right. I think also you want to make sure that not all 401k plans allow for this, but if you can max out your 401k before you retire, certainly if you maxed out your deductible for health insurance and you need to get some sort of procedure done, you want to take that into consideration. So again, I prefer clients retire in the first or second quarter, just because you kind of alluded to this, Cory, because then we have more latitude for tax planning, so that if you do have deferred awards that are going to be cashing in, we can do a little bit more planning. That if you do it all at the end of the year, we say, well, all right, you've already made your big salary and you got all these awards, you're going to have a heavy tax year. Sometimes you can't avoid that, and that's just part of it. But if you can time it, I like being earlier in the year, because then we can do more tax planning. There's also a strategy that I'm not going to go into too much detail on the topic of the show. You can go through Upticks and find a show called on net unrealized appreciation, or NUA. That's also another advanced tax planning strategy where you basically would take your company stock out of your 401k. But when you do this, you're taxed at ordinary income on the cost basis. So again, I don't want to get too technical, but my point is, if we were able to do that in a year where your salary is lower because you didn't work the full year, that could have some tax advantages for you. Again, full disclosure here, we're not CPAs, we're not giving you tax advice, but we do tax planning. And so I think it's very smart to look at that. And if you want to be strategic, you literally could save thousands and thousands and thousands of dollars by just retiring in January versus December. It literally could be that much. So something to think about.
Yep. Two quick things I want to add. One is on the net unrealized appreciation piece. There's also, Jake, a show on In the Money Insight called Net Unrealized Appreciation. Listen to them both. But as far as that goes, what I would encourage people is, if they have company stock in their 401k period, it at least makes sense to ask the question of whether or not NUA makes sense, or net unrealized appreciation. It might not, but if you liquidate company stock in a 401k, it doesn't matter, because you won't have that option anymore. So you should at least evaluate if it makes sense. And then secondly, the other point that I wanted to make, going back to what you said just a moment ago, and this is much smaller, but just kind of a tactical idea for someone all the way down to the month they're going to retire. If somebody retires on the 1st or the 2nd or the 3rd of a month, their healthcare benefits through their employer are typically covered for the remainder of that month. So that would be at least one small consideration if someone is considering whether they're going to retire on the 31st or the 1st. They retire on the 1st, at least their healthcare is covered for the remainder of that 1 month.
Now, is that a legal thing, or is that company to company specific?
It's it's the way that I understand it is it's legal as it pertains to healthcare plans in the Affordable Care Act. That if, Jake, if I no longer worked at Falcon Wealth Advisors on any one given day, the coverage that I have would continue through the end of the month because of the way that it gets paid.
Got it. Yeah, that's good. That's a good tip there. Yeah. Thank you for sharing that. And speaking of health, that was my 4th thing that I want to talk about today, was figuring out how your healthcare is going to be taken care of, right? You don't want to walk away from your employer and and if you're 55 or 60 or whatever, and not have a plan for your health insurance. So Medicare kicks in at age 65, and many of our clients retire far sooner than that. And so normally you can get what's called COBRA, which will be 18 months of your current employer's benefits. Now, typically you'll have to pay full price. So if they are subsidizing it and paying for some of it or all of it for you, you're going to have to pony up and pay for all of it. But you want to have a plan in place of what that looks like. Now, what's fascinating to me, Cory, is that a lot of my clients don't like, even though they've got millions of dollars, they don't even want to pay $1,000 or $2,000 a month for health insurance. They just don't like it. Even though the financial plan can certainly stomach it or account for it, they don't like paying for health insurance. So what do you talk to a client about that when they're like, Cory, I get it. I'm 55. I'm going to work 10 more years. I've got $4 million, but I don't want to pay for stupid health insurance. What do you say to somebody like that?
It goes back to, I think, what we talked about earlier in the conversation here today, which is what is it that you want to be doing? Because it's one thing to understand if you have the resources to be able to make those payments comfortably. That is one thing. But, in my opinion, Jake, and this maybe is a little bit of a bold take, if that was the primary reason that I was continuing to work in a certain situation, I would almost be inclined to say that's a little bit of a cop-out in a way that I haven't given enough time or thought to what I want to do when I'm not working anymore.
That's a good point. That's an easy answer. Yeah, to someone that's maybe a little scared and they don't want to admit it.
Yeah, it's okay to admit that, right? That's the thing. It's okay to admit that.
Yeah. Now, I don't want to discount that. Now, some people, they literally can't afford
correct
health insurance, right? And that's
absolutely
that's a whole nother issue. That's a whole nother topic for another show. We're talking about our typical client, though, that can afford it, right? They can afford to pay it. They just don't want to. That's a really good point, Cory, that maybe it is a little bit, maybe you challenge the client and say, hey, well, I'm showing you, Mr. Client, Mrs. Client, that you can afford it. Nobody likes to pay it, but I also don't like to pay my light bill. Or I don't like to pay for gas in my car right now, but I do. It's a utility. It's an expense. It's something I have to have. And so, I pay internet, probably don't have to have cable, probably don't even have to have internet, but I do, right? So it's just an expense that it's a line item that I've got to pay because I need it, right? And so that's good. And then my advice is that to shop it, right? So we've got an excellent, in my opinion, against my opinion, we could refer it out though to, there's health insurance agents out there that are independent that can go shop the open market for you and tell you what kind of coverage is available and what it'll cost. And you should do this before you retire, even if you know you're going to go on COBRA for 18 months. And certainly the health insurance industry could change in that 18th month. I think it pays, though, to at least sit down with somebody or have a phone conversation and talk about, well, when my COBRA runs out, what are my options going to be and what is that going to look like? So, and that'll help hopefully ease some of that tension or that anxiety about working just for health insurance. So, and again, maybe even this, if you're not even contemplating retirement, maybe it doesn't hurt to talk to someone. Maybe you're 2 or 3 years out, but you just want to know. I don't think it hurts to do that because I've seen clients that have that figured out. When we meet, that conversation is already, boom, I got it, I'm good, move on. Let's talk about the market, Jake, or let's talk about my financial plan or Social Security or something else, right? We're not talking about health insurance because they have taken the time to understand it, work with somebody to help them figure out what option makes best sense for them. And it gets part of it. It's your light bill, right? You gotta have electricity. You gotta have health insurance. It's just standard. You need to have that because ultimately, if you roll the dice and don't have it, that's a really quick way to blow up your financial plan. Is if you do need to have a surgery or something happens with your health, and you got to pay out of pocket for all of it. I mean, you could literally just wipe away decades of working by not having health insurance. You got to have it in there. It just makes a lot of sense.
Yeah, and I think, Jake, one other thought around this, and maybe a way I would challenge someone or at least give them food for thought would be if somebody is 50, in your example, 55 years old, has $4 million, plans to work until 65 because they don't want to pay for healthcare. One point I would make, because I see this with a lot of clients or even with our clients' parents, and Jake, I'm sure you do too, is that if someone has a lot of money that is tax deferred, if they have money in a pre-tax 401k or in retirement accounts, just one consideration is that if somebody does work until they're 65 and they continue making contributions and those assets continue to grow, they almost end up with a different sort of challenge later in life in their 70s and 80s and 90s, where they have to take required minimum distributions from their accounts. The government requires them to pull X number of dollars out. If those dollars in those accounts are really significant, they may have to take a ton of cash out of their accounts and pay taxes on that, when in some ways that could have been money along the way that could have helped to pay for healthcare. Not
a bad point, Cory. Yeah, so you're transferring that forced pull out. You're pulling it up sooner. They'll pay your insurance so that later in life you're not getting pushed into a higher tax bracket potentially. That's not a bad point. And that all goes into the whole big financial plan, tax planning, projections, and what we do at Falcon Wealth Advisors. Really good. Good. I know we're wrapping it up here of time. Is there anything that you wanted to leave here as far as a closing remark, Cory, on, again, solving these retirement challenges for the corporate employee?
Yes. For people that are contemplating their retirement, if they are facing these unique challenges, what I would encourage them to know is that, one, they're not alone and they're not the first person to face those challenges. And two, most clients that we work with, Jake, have the intention of retiring one time in their lives, and they go through this all one time, whereas we have worked with hundreds of people to help them retire and have learned from things that other people have done, what has worked, what hasn't worked, what kind of advice we can help give people from what we have seen and learned from working with other clients. So don't hesitate to lean on your advisor or the people that have that experience that can help guide you through that transition.
Yeah, that's really good. And I would say, maybe you're not even contemplating retirement, but your company was just purchased. And so there's a lot of transition going on. I would encourage you to go through this exercise with a fiduciary advisor, like us at Falcon Wealth Advisors, to see where you stand. And it's just a very healthy exercise to go through. And like you mentioned, Cory, we literally have hundreds of clients and have had thousands of meetings on retirement planning, particularly for the corporate employee. So we're very familiar, very versed in this. We got a team of professionals around us that can help crunch these numbers and have these meetings and ultimately set you up for the retirement that you envision, right? That you want to see. And I love that, Cory, though. It's not if you have enough always, it's if you had enough. So I thought that was pretty good. So thank you
I'll
again.
have to see if I can figure out where I read that, Jake.
Oh, you could take credit, but that probably wouldn't be good.
I know. I'm a man of integrity, Jake.
So that's good. Well, thank you again. Thank you, Cory, for joining me on the show. Thank all of you for tuning in. Like, subscribe, share our content. Cory, we're recording on Friday. You got any plans for the weekend?
Not too much planned this weekend. I think I might actually go mattress shopping. Very exciting.
Ooh. When's the last time you bought a mattress?
8 years ago.
Okay. That's what so I bought mine 7 years ago. So I was thinking the other day, I'm going to try to make mine last 10 years, but good for you. Good luck. They're expensive, but the mattress salesmen are great. They say, you spend a third of your life. Why wouldn't you spend money?
That's right. They say, well, and people say that you spend half of your life asleep or on your feet. So buy a good mattress and buy good shoes.
Not a bad idea. Good luck. I'm sure you're going to spend some money on that. But how
about you?
I'm going to play a little bit of golf. It's going to be hot, but I'm going to try to squeeze in around a golf. And then as of the recording, the Open, formerly called the British Open, is on this weekend. So, I'm a big golf guy. I'll be checking that out Sunday morning. I'll be waking up early, waking up Einstein early, and probably not Rachel, but Einstein and I'll be checking out the Open this weekend.
All right. Very good.
So, well, thank you all for tuning in. Thank you again, Cory, for joining me on the show. And we hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.